Well, good evening, everyone. Welcome back to the channel. Thank you all for tuning in this evening. We're going to start right off the bat with a question here. New investor says, Coach, I need some clarity. What does a reverse split mean? Is it necessarily a negative thing? I keep hearing conflicting things. How does it affect the dividend distributions? Does it matter? And how? So I'll answer this in as much detail as I can give. I think you asked a variation of this question before, but my take on it, it might not affect the dividend distribution, but it's going to affect your number of shares that you have. So say you've been following the strategy of dollar cost averaging into TSLY for the last year. Say you built up like 6,000 shares, and then say they impose a 2-for-1 reverse split. So then say, well, we can't say TSLY is at $10 a share anymore because it's not, but just to make the math easy, we'll say $10 a share. So if it reverse splits 2-for-1, then you will have half the shares at, say, a $20 per share price. So you won't actually feel like you're losing any money in the short term. But what's going to happen is that you're going to lose your number of shares that you had built up. And number of shares are really important when it comes to the dividend. And, say when we're getting like a, 58-cent dividend per share. And then all of a sudden you have like half the shares you had before. So even if the dividend stays intact, then you have half the shares you had before. Plus, to add insult to injury, your broker charges a fee for a reverse split. So in my opinion, and I'm not trying to be negative, I'm generally a positive person, of course. I mean, look on the bright side, after all, we have a 77% dividend payout again instead of 58% or whatever. So, we can spin things around and look at the bright side, if that is a bright side, of course. It's a little bit of sarcasm if you catch my drift, but reverse splits, and I've been a part of probably 4 or 5 of them in my investing career. They usually, I've never seen a company come back to prominence after a reverse split that I can think of off the top of my head. I had some Groupon stock, which turned out to be absolute crap. That did a reverse split 2-for-1. There were a few others. Okay, so we have some more comments coming here that are kind of echoing what I'm saying here. Sean Shively here thinks Tesla is poo-poo. We won't use the other word. Although I notice I'm starting to see profanity going around, and there's no I guess YouTube allows that, but we won't go to that extent on here. So you're saying reverse splits 4-for-1, so even worse then. But it's not all bad. I mean, you're still getting a 77% dividend payout, right? Split around $4 or $5. So I don't know all the details off the top of my head. I do know Jay has said that a reverse split would come if it got below $10. And yeah, like Bobby J here says, you lose half the shares, which is echoing, exactly what I've been saying to start off with. It's never good. It's never good. I have to agree with Bobby J. Like I said, I've seen probably 4 of them. Groupon was one that I know of. I want to say Office Depot was the other one. There's been stocks that I had like 20 or 30 shares of that went down to like 1 or 2 shares, basically. It almost, to me, it almost feels like a form of theft in a way. Not saying that's what it is. Again, I've interviewed Jay 3 times on this channel. I think Jay's a very smart guy. They're doing the best they can. Sometimes I see TSLY track exactly with Tesla. It's not easy right now. Like he said himself, they launched at probably the worst time they could have for TSLY in November of 22, when we had the crazy plummet and then a run up very rapidly in Tesla stock. And right now, the underlying is not making things any easier. And we've seen that not only in TSLY, but also SQY and Coney, which were doing brilliantly. Now, we do have another one paying like a 150% payout. But anyway, the focus of this video tonight that I wanted to make it about was to have a real discussion about the long-term future of Tesla. So I've been reading my comments throughout the day, and I've seen a lot of you have echoed concerns about the Tesla cars, the batteries, the longevity, the performance, how, the EV technology may not be quite there. I think it'll be perfected in the long run, but, we are definitely facing a bit of a, we're on a little bit of a down note in terms of Tesla's performance. There's no other way to put it, really. Can we recover? Absolutely. Do I hope we recover? Absolutely. How quickly we can recover is the real variable, right? It could take, who knows? It could take 6 months, a year. I mean, depending. I still think, from a macroeconomic standpoint, I think we're going to have a great year for the stock market in general. And a great year, if interest rates stay flat or start to get cut, could bode very well for the market. I mean, after all, we had a great year in 2023 with interest rates not getting cut, with interest rates still being increased in some periods. Okay, so let me do this here. I want to see if we can live stream in the Discord as well. Maybe get some of you all on. Okay, let's see. So I'm on the laptop. Let me just see if we can do this here. All right, so it says I'm voice connected. I'm not sure if it can actually hear me or not. It can. There we go. Okay, so I'll keep the laptop muted because there tends to be an echo there. But definitely want to make this interactive. Definitely want to get you all to participate where you can. So if this works, feel free to join in here. Let's see. The EV market is slowing down. You think so? I mean, we do have some other ones. I know Rivian is like the direct competitor. There was one that I was reading in the Discord that is actually, well, I still think, I forget what somebody said, but there's a few EV companies. Problem is infrastructure. What you're saying, the infrastructure is just still not there. Is that the case? YieldMax needs to go out of the money, change its strategy, or it's doomed. Less yield, more capital gain. Well, I think because they're going closer, and we can talk to Jay about this the next time he's on. And Jay does enjoy tough questions, by the way. It definitely sharpens the blade, makes him better. And he's a very great person to interview, I have to say. Okay, so if the infrastructure is not there, I know there's been a lot of money pumped in by the federal government over the last couple of years on EV infrastructure and whatnot. What else would it take at this point to get the infrastructure where it needs to be? And I know also they're working on faster charging stations and things like that, because my take, and I'm not saying, pro or anti one way or the other, but everybody that wants to be green, more often than not, yeah, you're not putting gas in the car, but you're still charging your car at home, which, depending on where you live, you're probably getting your power from a coal-fired power plant, so to speak. So I don't know exactly how green that is, but, if that's one of their big motives, coal isn't exactly the greenest thing, so to speak. Not trying to be one way or the other, but until we get like a really good solar grid and things like that, I think those things are going to continue to be a challenge. But not to get off on a side rant there, let's look at, and again, I'm being real here. I don't think this thing at this point, do you all know the rule about if a stock loses 50% of its value, it has to like double the price that it's at to come back. So the moral of the story, I forget exactly what the rule is called, but the further down that a stock or a fund declines, the harder the climb back up is. And these funds, honestly, they can pay out all the yield that we want. They can pay out 100%. But if we're losing our principal, as investors, we're still not coming out ahead of the game. And the point to expound on that, if we're getting an 80% dividend payout, or not 80%, I mean, if it pays out 58 cents a month, but then we drop $2 in a month, the 58 cents is not offsetting the $2 in principal that we lost. We can reinvest the 58 cents. And if we do, some viable strategies that other people have pointed out, like Blake Downer pointed out, protective puts, buying puts to protect, to hedge. The thing is, these funds require a lot of work on our part. These aren't necessarily just, buy it and walk away. And Jay has said this himself. These aren't just buy them, go to the Bahamas tomorrow, retire, and then expect your principal to be intact and get a great dividend. It would be great if it worked that way, but this is not. It's not a perfect world, and we have to be realistic. So I absolutely did today. Very, very keen observation on your part. So we had. I'm in Tampa. We had our biggest event in Tampa today. It's called the Gasparilla Parade, and I went, and it was hot outside. It was like 80 degrees today, so my face probably matches my shirt, right? And of course, as you all know, I wear red when the market's down, or when a fund that we're talking about is down. So again, just some doses of realism. We need to be realists when we look at these funds. And there's been some great moments with these funds. I mean, if you look again in the summer, we were doing great. Just like with Coney and SQY, we were getting a 30% appreciation in the principal and getting a phenomenal dividend. So, I mean, there's an ebb and flow. But right now, like, I certainly haven't sold any of my TSLY. I don't have a large percentage of my net worth tied up in it. I'm not going to make any moves at this point. I'm probably more than likely just going to ride it out. So let's see here. Okay, we're getting some really good comments here. This is what I like, good interaction. The underlying is the problem. I feel YMAX may be the best way to play yield max. I absolutely, when I get my next dividends, I'm going to buy into YMAX. So notice, I'm not saying sell. Now, if it does get back to $18 a share, I probably would sell some of it. And you know what? As investors, every one of us has the right to do that. It's a free market. It's a free country. It's a free enterprise, capitalist economy. No one is beholden to one fund or one family of funds. So you know what? The whole point of investing, you buy low. What's the other side of the coin? Sell high. Even as a dividend investor, if it's up to you as the investor what you want to do with your own money. And none of this is advice. This is, like I say, edutainment. Who knows? I mean, we could lose this all. We could double our money if it comes back. I mean, we don't know. Anyway, let's see. Jonathan Harris here says, I personally sell in the money calls on my TSLY, which hedges my position. Do you want to, for the benefit of the audience, do you want to put an example strike price and expiration for one of the trades? Because I think this would be very beneficial to the audience. And I think that's definitely a good move. You're selling in the money to hedge your position. Are you buying on the underlying stock, or are you actually doing it on TSLY itself? Because TSLY is basically a synthetic position of a synthetic. So doing options on top of that can be somewhat risky. So yeah, if you have an example like strike price and expiration, it would definitely benefit the audience for sure. And that's what we want to do, right? Help each other out. JEPQ, it's way better, way safer. So something I did, and I feel a little stupid for this now. In July, I actually sold out of my JEPQ at a gain, which you can never knock yourself for making a gain, right? But I took the gain in JEPQ, which I owe capital gains tax on now, of course, bought TSLY with it at a higher price, a much higher price than what it's at now, right? So, we're all here to learn from each other's mistakes. I'm not perfect. Nobody is. But yeah, good move. This is awesome. We're getting a lot of you on. A lot of you care about the truth and realism. I like to see that. That's very encouraging. So let me go to the charts now. And by the way, just so you know, you all are going to start to see a lot more of me now. I know I've been kind of treating this channel like a hobby, but those days are going to come to an end. I'm going to be putting a lot more time into this. So I appreciate all of you all's support, and stay along because we're going to have a very fun ride. We are here to stay, certainly. All right, so let's look at, I want to do a little bit of chart analysis here, just some basics. I mean, I don't really do too many candlesticks on these things. I leave that more for Blake and Andre. my other podcast people. If you all haven't subscribed to the Brewing Great Returns podcast, I would highly recommend you do so. That's the only recommendation I'm going to give tonight. Of course, I don't give recommendations on funds or buying or selling, because this is just edutainment and opinion stuff, like I say. So, but I think we're getting some new people on, so definitely feel free to subscribe. Perfect. All right, we got an example here. So Jonathan Harris says, I bought some shares this week, 100 shares of Tesla at $8.70 a share. Okay, so you're attempting to buy low with the ultimate intention, I'm sure, of selling high. Sold $8 strike price for August 16th, 2024, collected $85 in premium. Pretty good. That's pretty good. If you get called away, you made a slight profit on the shares. That's a good move. So that's something anyone in the audience can certainly look into. Gene He says, hello, how does the collateral U.S. bonds work against a dropping NAV? That's a really good question. That's not one I have an answer to off the top of my head. I would think that the bonds and the cash positions are a little bit of insurance, maybe. They're a little bit of a more conservative position. Clydesdale Claude says, this environment that Tesla is in needs personal account management in the individual investor. 100%. That's exactly, you're echoing exactly what I'm saying. Jonathan Harris says, I also collect the dividends in the meantime. I can always roll the call if it makes sense. Yeah, definitely. If you don't want to get called out of this, that's what you would want to do, is roll the call for sure. What do you think about protective puts, by the way? Because so if you buy them, and if it runs up, you can end up making money on the put. And then if it gets, it's like the Warren Buffett strategy. If you look up the Warren Buffett strategy with Coca-Cola, with how he buys puts, and he can actually enter in, like I believe the worst that can happen is you enter in for a lower price than, you enter in cheap, basically. Let's see. I have been eyeing XOMO, going to start moving to that direction. I haven't looked at XOMO too much. We can do a quick dividend review, but XOMO, there's nothing about it that's really stood out to me. And oil doesn't seem to be fluctuating like it was, at least in 2022, the year that we blamed everything on Putin, of course. So yeah, we did see a lot of fluctuation. We saw like $7 a gallon gas in California. We actually remember the joke 7-Eleven, like, wow, not only do we go to 7-Eleven for gas, but wow, it costs 7-Eleven. Well, it did at some places in 2022, but that's another story. So, okay, yeah, we'll look at that. Protective put on what? On Tesla itself. Yeah, and I believe you can get them cheap. Thanks for the answer, Coach. Looking forward to Big J coming on. Absolutely. I hope that answered your question for sure. Andre Brown, aka New World Order, one of my favorite people, one of my favorite names. JEPQ, JEPI, GPIX, GPIQ, SPYI, FEPI, SVL have been my safest high yield option income funds so far. Those are definitely, I would have to say, some good ones. I definitely regret getting out of the JEPQ for sure, and SVOL. SVOL, I would have to say, for like an 18% dividend yield, which I think it dropped a little bit, but it's one of the safest yields that's been out there. It's one of the safest yields for 18% with like no principal fluctuation. And in fact, when I was in SVOL, I gained in the principal, and then foolishly I sold it because I bought in on this bandwagon, of Tesla, and I still have it. If worse comes to worse, I'm gonna go down with the ship. So like it's not like I'm selling any of it at a loss. Let's see here. Oh, Costco gas. Oh, you go to Costco, huh? Welcome to the channel, by the way. Haven't seen you on in a while. It has come down. That's pretty good, especially for out where you are. Glad to see you on, of course. Robert Beckwith. I'm thinking Coney and Tesla should have started trading at a higher SP, more room to work. Yeah, exactly. I haven't thought of doing puts on Tesla. I'll have to do some thinking. Well, listen to what Blake has said. So Blake actually went on to another Discord, and he was trying to be helpful. He was trying to educate that audience, which I think we share some audience, but he was trying to help educate that audience on a way to hedge. And unfortunately, he got banned from that Discord for just trying to provide help. But like I said, if something like that ever happens, everyone is welcome into my Discord. We'll never ban anyone. We did kick one person out, but they became a big problem. I hate to kick anyone out. It's only ever happened once. So just being transparent and being real with you all. That's what you all will always get here. You will get me being real with you and me telling the truth. Now I do, sarcastically, I'll use some thumbnails, like, 77% dividends, but you all get what I'm saying, the dividend paradox, right? So if we have a 58-cent dividend and yet the fund is now below, like, where is it at actually? It's fallen so much to where the yield is 77%, which may look good, but why? You got to think, why is that the case? Because the fund principal has dropped so much, right? CZ says, still holding my 20,000 shares of TSLY. Well, that's a pretty good chunk. And, you would probably be projected to get like a full-time income on that, but you probably have just seen so much principal erosion on it that it's like, wow, I'm getting this over here, but losing this over here, right? Still holding my 20,000 shares of TSLY. Will still add to the stack on X dividend day. Okay, well, that's good. That's good. Everybody's got to do what works for them, right? Do you feel QQQY or JEPY is a safer way to play these high yield ETFs since it tracks a whole sector, not specific stock? Absolutely. And I have some myself. And the good news is I think I'm slightly down in both. And I point out whether I'm up or down, not to be any particular way. I think a lot of us are in the same boat. We buy into some of the same funds. I'm slightly down, but I'm not disappointed because so far the dividend yield is exceeding what I'm down. And that's always, it's a bottom line equation, right? Does the dividend yield exceed what you're down? If you come out ahead, you've met your objective as an investor, right? So yeah, I do agree with you on that sentiment that those are basically safer plays because you're playing a whole index. But it's a similar strategy, certainly. Let's see here. Good discussion, guys. I'm really liking this. At Jonathan Harris, would you be looking to dump your shares of TSLY or just to bring in additional dollars? John is on. Welcome. We're overdue for another Zim video, right? FEPI, YMAX, SVOL. So those are your favorites now, huh? Like I said, FEPI paid out a 26% yield, and the principal is relatively safe in that one. I honestly would rather have that, and I'll tell Jay. I've actually asked him that before. Could we have a lower yield with better principal protection? And he basically said no. And I give him credit, for his candor and for his honesty. Yield max. They want to maximize the yield. So I have zero intentions of selling TSLY. I do the covered calls as a way to protect from losing too much. And that's good. That's the point. You want to do everything you can to protect your position, to protect the bottom line where you can. Okay, Sean Shively, I have and like SVL and JEPQ and VDY is in the green, and I bought it last July. Coney is questionable. We were doing great in December, but we've had a little bit of a rough patch here to start the year. But I think we'll recover. I think everybody's still expecting a really good, really solid year for cryptos. I have 11 individual yield max. Wow, well, good for you. Diversification, right? Have you bought into YMAX? Let's see here. Okay. All right. So we're caught up on comments now. Let's go share our screen here. Wow, it's like old times. I'm liking this. All right. So Tesla. So how are we looking? Sometimes we have to analyze the past to have an idea of the future, like an economist, right? Okay. It's I gotta tell you, I have to like almost rub my eyes to see Tesla below $200. I have to really kind of look twice at this. 183.25. We were up Friday. If we look at the 5-year view on Tesla, okay, so over 5 years, 5 years ago, and this is the post-split adjusted price because remember it split back in 2021, I believe. I want to say it split. Has it split once or twice? I'm not remembering off the top of my head, but we are still way ahead of where we were 5 years ago. We were at 21.33 on a post-split adjusted price. We got as high as 381.59. Now, obviously, all of us salivate to see those numbers again. If we could get back to that in just the right manner, we could see our TSLY run way up again, which would be awesome. I want that as well as anybody else. So the question is, how do we get back there? Because The run up here, again, so we have macroeconomic factors and microeconomic factors. We have systemic and unsystemic risk. There's firm specific risk. They teach you this in finance. There's firm specific risk, and there is market risk. So, what do we mean by that? When it comes to the market as a whole, what happened in 2020? We had the pandemic. 2020 and 2021, we had stimmy checks, right? We had a lot of money being injected into the economy. Thus, we had inflation. What did that do to the stock market? From the start of the pandemic all the way to 2021, we had a massive run up in the stock market, like not only recovery, but we exceeded our prior highs. So obviously from 2020, where we were at a post-split adjusted price of $55 here, or actually $52. We ran from $52 all the way up to almost $400. So what's that, like an 8x? And that happened, you have to remember, because of macroeconomic factors, right? Stimmy checks, tons of money being pumped into the market, so on and so forth. Once that stopped, once the Fed started raising interest rates, so the point I'm trying to make, there are a couple of things going on here macroeconomically and microeconomically, or firm specific. Tesla has its own firm specific risk, such as, missing earnings for a couple of quarters. But what part of the reason of what's caused it to drop from November of 21 to where it hit the low was obviously when the Fed started raising interest rates to try to combat inflation. That caused downward pressure on the whole stock market, right? We had an abysmal year in 22. And then we just started to recover at the end of 2022 and beginning of 2023 to where we are now. So, moral of the story, the interest rates being raised, had a significant impact, and that is a macroeconomic factor. Now, that being said, there's multiple headwinds facing Tesla as a company. There's concerns about the cars, there's concerns about Elon Musk's behavior, him buying Twitter, all that kind of stuff happened in this time frame. So we've kind of really spun our wheels, at least from summer of 22 all the way to here. We were pretty much flat, and then, we're dropping. But, it's going to take Tesla over probably the next couple of years. They're going to have to turn things around. They're going to have to get their act together. I think they have a bright future. I think they've got a great product for the most part. And, they do have good, I would say, long-term prospects, despite the cash flow position right now. Anyone that looks at those statements and does analysis would tell you it's still overvalued, and you would be paying a premium for shares of the company. But in the long run, looking at it from a long-term standpoint, yeah, it's certainly, I would think it has a bright future. It has a good, reasonable outlook. And then the next earnings are going to be in April. So, we missed the last 2 quarters here. We barely met it in quarter 1. Quarter 2, we beat it. Quarter 3 and 4, we missed. Quarter 1 of this year, April 17th, it's saying it's a lower threshold to exceed, but we certainly can exceed it. And that will, if we do beat it, that will put some upward momentum on the stock, I would think. So, and there's a lot that can happen in the next couple of years. So my long-term, I would say my short-term outlook right now on Tesla is probably bullish. My long-term, I'm sorry, I mixed it up. My short-term outlook is bearish. My long-term outlook is probably bullish on Tesla. So that was really what I wanted to do here with you all. Have a nice live discussion here and just really discuss reality, discuss where we are. So that is one opinion. Let's go back to some comments here. Oh, this is awesome. We are getting back to old times here. I'm loving it. Okay, let's see. Where did we leave off here? Bill M. Love comments like this. Appreciate you, Coach. Well, I appreciate you all too. You all are the best fans. Not just because you follow me, but you really are. Clydesdale Claude says, does the widespreads on TSLY options give you an ill feeling? Denny Keaton's on says, howdy. CZ says, Kathy Woods is adding millions. Now, I did see that she bought at a low point, millions at Tesla prices right now, so don't worry. They're in the game to win. I agree. I think we are. Like I said, long-term, I'm bullish. New investor, glad to hear you're going to be making more videos. If I could suggest you're doing a long video overview on all the current high-yield ETFs out there. I'm thinking Yield Max, Defiance, Crane. Yeah. That's exactly what I plan to do. Certainly. Thank you for the suggestion. And by the way, for all of you all that are on, we do have a Discord. I will share that link for you all. Hopefully you all can join. We definitely want to ramp things up there. Slowly buying TSLP. Yeah, we did a video on that one. That one has a similar strategy, but it seems like it might be a little more conservative. Let's see. It's overwhelming with all these different high yield stocks, ETFs popping up constantly. I agree. It's like the season of the ETF. It's like seems like everybody's launching an ETF. I should launch one. Call it the Coachy or THB, right? It's some people will tell you it's not as difficult as it seems. Just buy all of them or YMAX, right? New investor, agree. Like one a week seems. Let's see here. Remember, we're going to be heading into a recession. Yeah, but they said that like a couple years ago. The definitions are always changing about recessions, right? I think interest rates come out this week. Oh, we can look at that, actually. I guess having options is a good thing, but I'm having a hard time keeping up. Yeah, okay, let's do two things real quick. Let me share the Discord link. So let's go to Yahoo over here. Not Yahoo, YouTube. Come on, coach. Okay, let's do this over here. I'm gonna go to the main channel. Thank you all for sticking with me here. We're about wrapped up, and then I'm gonna try to get a couple more out. Okay, so let me go to the main channel here. We need the laptop to move a little faster. That would be really great. Okay, oh, there's me live streaming. Okay, let me share this real quick because I just want to share the Discord link with you all fine folks. All right, come on, YouTube. Okay. All right, link is coming. We'll do one more comment here real quick. If interest rates go down a little bit, I'm bullish short-term and long-term. Tesla just needs to stay above 180. Yeah, that's probably, if you're doing some charting, that's like going to be like the support level, right? Tesla's the most shorted stock. Yeah, you know, I hate to agree with Andre, something he said back in July, but if you shorted this in July, you would actually be sitting in a pretty good spot. Oh, Clement, yeah, haven't seen you in a while. Great to see you too. I'm glad we're getting the gang back together here. It's a good feeling seeing all of you all. Okay. Oh, here's a number, 80 plus million. All right, here is the Discord link here, coming right up. Okay, and then I want to read this to you that I posted today because it's important. It's not just about the Discord link. Okay, here we go. Because this has been an issue going around. I'm a strong opponent of censorship in any way. So anybody, not just all of you all, but anybody that gets banned from any other Discords that speaks sensibly or whatever, everyone's welcome here. We're an open, free community. So this is the link here in my community tab. Let me do this. I will copy and paste it into StreamYard so you all have it. And yeah, we're happy to have you all on. We want to grow the THB community. Let's see here. Jay, honestly, things just really worked out. We had, and this is back when the channel first started to take off in, what was it, first quarter of last year. I believe it was one of my subscribers that helped out in that regard. So anyway, again, here is the link here. I will keep that up. And then I want to show you all one more thing before I sign off. I'm going to go to, because you were talking about the interest rate announcement. There is a good website called Forex Factory. I think it's forexfactory.com. And it's got a lot of good news and stuff like that. A lot of good market-related news. A lot of good macroeconomic stuff. So let's go here. Come on. It's a site like for forex traders. I don't really do a lot of forex trading, but it's got a lot of good information. So okay, here it is. Forex Factory. We'll look real quick. As far as today, obviously there's no news because it's Saturday. Sunday, no news. Let's see. Monday, so it goes by currencies basically, which are countries. There's nothing U.S. based. Monday, Tuesday. Here we go. We're gonna have the consumer confidence report. So when you see the red here, that's significant impact. JOLTS job openings report. Those are the two U.S. Factors that are going to be announced coming up. On the 31st, we've got non-farm employment change. We've got Chicago PMI. We've got employment cost index, probably an inflation measure. And then, yeah, we have the FOMC meeting Wednesday. So that's going to be the big announcement you all were talking about. So, all right, you all. Yeah. And you know what? Hold on a second. We'll go another minute here. We'll look at the rest of the week. But yeah, like I said, that's going to be the big one. Let me see here. I'm not concerned with the spread. The ones I saw are 6 months out. Worst case scenario, get called away, can't roll, still make out ahead. Yeah. Okay, good. You all are having good discussion. RS kills investments. I have to agree with you, actually. Good night, coach. It's all ahead of us. Yep. Want PDI. FSCO. Let's see. Plus, if Tesla stays flat or continues down, I'm safe on the calls. Each month's distribution lowers the share price. Spot on. Okay, one more quick thing here, and then we will sign off. Okay, back to Forex Factory here. Yeah, so again, Wednesday, January 31st, Fed funds rate, FOMC statement, and press conference. And that could jolt the market because Papa Powell tends to be very good at that. The market really reacts to what he says. Thursday, let's see, we've got job cuts announcement, which is only in yellow. Then we've got unemployment claims. That's right. Well, no, I'm thinking, first Friday of the month, we're going to get the unemployment rate announced. ISM manufacturing PMI and prices. So yeah, we're going to have some major macroeconomic news next week. Natural gas storage, Ward's total vehicle sales. Okay. And then Friday, average hourly earnings month over month, non-farm employment change, unemployment rate, revised consumer sentiment. So it's going to be a big news week Friday. All right, you all. Thank you all for tuning in. Like, comment, and subscribe if you haven't already, and join the Discord. And we will see you all very soon. I plan to be. Hold on a second here. What's my other channel? Oh, Brewing Great Returns here. Brewing Great Returns with the $sign. There we go. Let me put that up too. Definitely subscribe to that one. It's me, Blake, and Andre, and we have a pretty good podcast going. Definitely trying to ramp that one up too, and hopefully add value to all of you all. So thank you all. We will see you all soon. Take care. Bye.